India's booming logistics sector. Hey everyone! Today, we're diving into India's booming logistics sector, highlighted by a record 105.4 million e-way bills raised in August 2024, marking a 13% year-on-year growth. The massive jump in the movement of goods within and across states signifies a strong uptick in manufacturing and trading activities, further fueled by preparations for the festive season. E-way bills, August 2024 outperforms July. Just to put things in perspective, July 2024 saw 104.8 million e-way bills, which was already impressive, but August outperformed. This increase in logistical activities shows how industries are gearing up for increased domestic demand, particularly in the run-up to major festivals. Manufacturing growth, business and production on the rise. On top of that, recent reports from S&P Global indicate that Indian manufacturers are seeing increases in both business and production, although the pace of growth has slightly moderated compared to the previous month. Still, these numbers are above historical standards, driven by strong demand and moderating input costs. The HSBC India Manufacturing PMI was reported at 57.5 in August, which is above its long-term average of 54.0. Automobile sales see a 3% rise. Meanwhile, automobile sales also saw a 3% rise in August, according to data from the Federation of Automobile Dealers Association, FADA, despite some challenges in commercial vehicles and tractors due to weather-related disruptions. The retail auto market was impacted by 16% excess rainfall in August, but dealers are optimistic about growth prospects during the festive season. Economic growth and supply chain efficiencies. The surge in e-way bills reflects broader economic growth, benefiting sectors like manufacturing and retail. This also points to increased business activity and a smoother supply chain, which aligns with India's ongoing economic recovery. GST compliance and improved infrastructure. Interestingly, the rise in e-way bill generation is also linked to stronger GST compliance and improvements in infrastructure. This trend not only helps the government with better tax collection, but it also enhances transparency in the movement of goods and reduces tax evasion. August's transactions will be taxed in September, and this trend is likely to boost GST revenue, which has already stayed above 1.7 trillion Indian rupees each month this fiscal year, after peaking at 2.1 trillion Indian rupees in January. Summary for investors. A record 105.4 million e-way bills in August reflects rising manufacturing, trading activities, and supply chain improvements. The HSBC India Manufacturing PMI is at 57.5, indicating solid growth in the manufacturing sector. Automobile sales are up by 3%, despite weather challenges, and optimism remains high for the festive season. Increasing e-way bills show greater GST compliance and strong tax revenue growth, making this a positive indicator of India's economic recovery. What it signifies for investors. Record e-way bills suggest booming business activity and higher goods demand, making it a ripe time for investments in logistics, manufacturing, and retail sectors. Growing GST compliance means the government is more efficiently collecting taxes, indicating greater transparency and fewer chances of tax evasion, creating a more predictable investment environment. The festive season boost could be a pivotal time for automobile companies, making it a good time to explore investments in auto stocks. Stay tuned for more updates on India's economic landscape. Like, share and subscribe for more videos. Here's a list of companies listed on the stock exchange that can potentially benefit from the economic trends, along with detailed explanations of how these trends might impact each sector and company. 1. Logistics companies. As the record number of e-way bills indicates rising goods movement across India, logistics and supply chain management companies stand to benefit from the increase in transportation and storage demand. Gaudi Limited, a pioneer in express distribution and supply chain management, Gaudi can capitalize on the increased movement of goods, especially ahead of the festive season. Blue Dart Express Limited, with a large network in express logistics and freight forwarding, Blue Dart's business model directly benefits from the growth in e-commerce and rising transportation activities indicated by the surge in e-way bills. Container Corporation of India, Concor. As a government-owned company specializing in containerized freight, Concor can leverage the increasing movement of goods, particularly in interstate logistics. 2. Automobile manufacturers. The 3% rise in automobile sales in August, despite weather disruptions, shows that the sector is resilient and poised for growth as the festive season approaches. Automobile stocks could see a boost as consumer sentiment improves and demand for vehicles rises. Maruti Suzuki India Limited, as the largest passenger vehicle manufacturer in India, Maruti Suzuki will benefit from increased festive season sales, especially since a large portion of e-way bills are tied to vehicle deliveries. Tata Motors Limited, Tata Motors, which has a strong presence in both passenger and commercial vehicles, can benefit from the festive season demand for automobiles. Tata's push into the electric vehicle, EV, segment also adds long-term growth potential. Mahindra and Mahindra Limited, known for its strong portfolio in tractors and SUVs, Mahindra and Mahindra will likely benefit from festive season vehicle sales and could see a rebound from weather-related disruptions in the commercial vehicle space. Bajaj Auto Limited, with a strong portfolio in two-wheelers and three-wheelers, Bajaj Auto could benefit from increased retail demand for personal and light commercial vehicles during the festive season. 3. Retail and FMCG, fast-moving consumer goods. The increase in e-way bills signals that retailers and consumer goods companies are stocking up ahead of the festive season. Higher consumer spending during this period will boost sales for both retail and FMCG companies. Reliance Retail, part of Reliance Industries Limited. As one of the largest retail chains in India, Reliance Retail is well positioned to benefit from increased consumer spending and supply chain activity. With a diversified portfolio across groceries, fashion, and electronics, it stands to gain during the festive season. Avenue Supermarts Limited, DMart, a leading player in the retail space, will benefit from an increase in consumer demand and spending, especially in consumer staples and festive-related purchases. Hindustan Unilever Limited, HUL. As one of India's largest FMCG companies, HUL will likely benefit from increased consumption and stockpiling of household goods, personal care products, and food items in preparation for the festive season. ITC Limited, ITC, which has a diversified portfolio in cigarettes, FMCG, and packaged food, will see higher demand for its products due to festive consumption trends. ITC's strong presence in both urban and rural India gives it a broad customer base. 4. Manufacturing sector. The HSBC India Manufacturing PMI of 57.5 in August suggests continued growth in the manufacturing sector. Companies involved in the manufacturing of consumer goods, industrial products, and machinery are likely to see increased demand. Larsen & Toubro Limited, LNT, a leader in engineering and construction, can benefit from the ongoing economic recovery in infrastructure development. Rising business activity will also likely increase demand for its industrial products. Siemens Limited, Siemens, which operates in the automation and digitalization space, is well positioned to benefit from increased manufacturing activity. Its industrial products and solutions will see higher demand as manufacturing sectors expand. Bharat Forge Limited, as a leading player in the auto components and industrial products space, Bharat Forge will benefit from both rising automotive production and increased manufacturing activity in other sectors. 5. GST-linked companies and financial institutions. The increased GST compliance and improved tax collection, which can have positive implications for financial and fintech companies that facilitate tax collection and compliance processes. Banks and NBFCs may also see increased activity as businesses ramp up operations. HDFC Bank Limited, as one of India's leading private sector banks, HDFC Bank will benefit from increased business activity and higher financial transactions as companies comply with GST regulations and engage in more interstate commerce. ICICI Bank Limited, ICICI Bank, with its large presence in corporate banking and retail banking, will see an uptick in business activity and lending opportunities as businesses grow in response to increased goods movement and manufacturing. Paytm, 197 Communications Limited. Paytm, a digital payment and financial services company, can benefit from the rise in GST compliance and business transactions, given its role in facilitating payments and financial services to SMEs and larger enterprises. 6. Warehousing and supply chain companies. The buildup of stocks ahead of the festive season will benefit warehousing companies, which play a crucial role in managing inventory and ensuring efficient supply chains. Allcargo Logistics Limited. Allcargo provides integrated logistics solutions, including warehousing. With the increase in e-way bills and inventory buildup, Allcargo is likely to benefit from the surge in demand for storage and distribution services. Mahindra Logistics Limited. As a provider of end-to-end supply chain solutions, Mahindra Logistics will benefit from increased logistical activities during the festive season, as well as ongoing manufacturing and retail growth. Summary for investors. Logistics companies like Gaudi Limited and Blue Dart will see increased demand due to higher goods movement, indicated by the surge in e-way bills. Automobile manufacturers like Maruti Suzuki, Tata Motors, and Mahindra stand to gain from the rise in sales, particularly ahead of the festive season. Retail and FMCG giants such as Reliance Retail, Avenue Supermarts, D-Mart, and Hindustan Unilever will benefit from increased consumer spending and supply chain efficiency. Manufacturing leaders like L&T, Siemens, and Bharat Forge will thrive as the HSBC Manufacturing PMI shows sustained sector growth. Financial institutions like HDFC Bank, ICICI Bank, and fintech companies like Paytm will benefit from increased business activity and GST compliance. For investors, these sectors and companies represent strong opportunities driven by economic recovery, rising consumer demand, and the ongoing festive season.